Poonam, you were worried about inflation and pressures on Amazon. This looks like a pretty good report.
It actually is a very good report. In fact, we were worried about inflation as Amazon had said that there would be an additional $4 billion in cost for the second quarter, but we were not worried about what we saw earlier this week with Walmart taking down guidance, as we had thought that Amazon has a different customer base. Amazon doesn't target the low-income consumer, so we didn't think Walmart's woes would bleed into Amazon, and that's exactly what we saw today. Sales are better. The guidance is actually really good for the mid-teen sales increase next quarter. Part of that is driven by the Prime Day shift, but it also shows that the customer is spending where they find value and convenience and speed.
Talk to us about how they're managing their own costs, because we did hear from the commentary, and we'll get more of it on the call from Andy Jassy, saying, look, despite these headwinds of inflation and indeed a concerned consumer, they're managing to control their own costs. How are they doing that?
Well, part of that is because they have their own delivery network, right? So they can tailor those costs. They can use computers and systems to better align delivery methods and really help bring those costs down. That said, we don't have the full details yet, and we hope to get them all on the call later today about how much of that $6 billion in incremental cost, of which $4 billion was expected in 2Q, how much of that will be persistent in the back half of the year, or have they gone through most or half of it?
I'm really interested in some of the other things that Amazon is doing here. You're seeing AWS net sales also beat analyst expectations here. You're seeing Andy Jassy's first quote really talk a lot about some of these other things that they're doing. Thursday Night Football, delivery from Grubhub. This is rare in this kind of environment to see CEOs speak about a little bit more moonshot projects here. So how much do we expect Amazon to really grow and expand given all of these other pressures that they face and are shaking off?
Yeah, I think, the misconception that Amazon is mature across any of its businesses is incorrect. Amazon has plenty of opportunity to grow its online business, as well as AWS, advertising, and media. The recent news that we saw on Amazon, whether it was through Grubhub or even in healthcare, just shows that there's so much opportunity ahead for Amazon. They're just tapping the surface. And when they increase that Prime membership fee, which they did earlier this year, people are still sticking with it just because of all the value that they get with the Prime membership fee.
Hey, Poonam, how come such a beat when it comes to operating margin here? Estimates were for 1.65%. It came in at 2.7%. Where is Amazon able to control these costs in an inflationary environment?
I'm very interested in hearing what they say about where they actually control those costs. My guess would be AWS definitely helped contribute to some of that, but also perhaps it might be on the transportation front where they do have their own delivery network. But we're waiting to hear, just as you are. We don't have the detail there, but it looks like they may not have exhausted all their cost savings earlier, and they found some extra.
Does that continue when they're looking at third quarter operating income that could be flat? And I'm curious if this is an investor base that is prepared to maybe see lower profits, to go back to maybe the original company that we knew, a heavy investment in their own business, instead of maybe returning some of that to shareholders. Is that sort of an investor base that is prepared for that pivot? Do you see that?
I think Amazon should continue to and will continue to invest in the business, because keep in mind, many of their businesses are still very young, whether that's AWS, whether that's advertising, whether that's media, or even early investments into grocery and pharmacy, which are really nascent when you think about their online penetration. So there will be a lot more investments going forward. That said, on the profitability part, if their sales grow in the mid-teens next quarter, that also provides them with leverage, right? It's much higher than what we saw in the second quarter. So you should see profits expand over time. And when I say over time, it's the long run, right? Right now, Amazon is still investing, but they do have very lucrative, very high margin businesses that are still young in nature. In fact, AWS alone, we think margins could at some point reach 40%, and that contributes to more than 2/3 of their operating profit.